Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So here we are meeting the tricky performance that we discussed recently. So gold is the most tricky market in general, and although it was some chances that maybe we will not get this tricky situation, but as you can see, everything happens as usual. So the trick stands with the grabber that we've got recently, and this, well, for some traders this is really good news. It's just because they could try to take the long position, suggesting that market maybe will move higher and taken out of this top. This trend stands bullish by far. At least appearing of the grabber for bulls lets to minimize the risk. If even you will be wrong, it's really not the big problem. It's just because currently market stands 1950, the low stands around 1940. So $10 per contract is very small loss, and you could actually try to make the trade with this, but in case of the success, this will be really great, outstanding risk-reward ratio. That is the most attractive side of the current situation. It's because you have the pattern, you could stick with it, and you definitely know where the invalidation point stands. But for the bears, it's a bit more difficult situation, is because they have pattern against them, and they need to make the decision how to better deal with this. Those who want to take the short position, because reasons for taking the short position exist as well. So in general, we have this strong performance on the interest rates in general, and that's making pressure on the gold and the performance of the dollar index as well. And here's maybe some solutions that might be useful to you that we would like to offer according to this situation. So on the daily chart, the major conclusion is that we have the pattern. Bulls could use it for taking the long position. Bears should deal somewhere with it in different ways. So on the 4-hour time frame chart, why in general this grabber is important? We probably could not really be too worried about it if we wouldn't have the XOP here. So appearing grabber here and the validity of this ABCD pattern makes the grabber getting some sense to exist. It's just because it could become the starting point for the market to complete the XOP, because XOP is not completed. So market right now stands at the support. If you would like to take the long position, market also showing here some minor retracement. On the bottom you could see a good reversal bar, so it created new lows and closing above the top of the previous candle. And here is, well, maybe a very good point to make the decision about taking the long position. It's just because market stands at 30% pullback, trend turning bullish, with the stops somewhere below this area. It's everything clear for the bulls. If market somehow keep dropping, taking out these lows, trade is over. So grabber has failed, and bears taking control of the market. Now speaking for the bears. Here's, by the way, levels by guys that you could consider for taking the long positions. 30%, 1950, 1946 is 618. Now for the bears. Yesterday we said you could try to take the position on bread and butter, and if grabber will not be formed, you already will have the position. Take a look. Here was the bread and butter. Actually, it was 3 close above the 3x3, and if you remember, here we were also having the 30% resistance of the same frosting action. So this was bread and butter, and it has worked nice. So you can see market has reached the 618 support of the whole upper direction, or even lower. But despite that pattern has worked great, it has not become the pattern that triggered downward continuation. It means that grabber has survived. And now for the position taken, bears meets the problem of the existence of this bullish pattern. So there are two ways I see that how you could actually deal with it. So first of all, when the market starts upward direction, you still could consider the confluence. Because if even we have the grabber, this area relatively strong. It's also natural support resistance area here. And at the first touch of this area, chances stands very good that market could show the pullback. That lets you to move stops to the break-even. Once you will get the position, for instance, you could use extension here, based on this bread and butter trade, by the way. So, for instance, you could consider this one, but you need probably the OP, not the XOP area. That create, well, actually good agreement with the confidence. So you could consider taking position with the 1960, placing stops above 1965 and see what will happen. This is the first approach. Second approach is that just wait what will happen with the grabber. And you could use stop sell order right around 1939. Why? It's just because if market starts dropping, it will increase chance for failure of the grabber. And with the placing stop sell entry order, stop entry order around 1940, maybe slightly lower, you could take the position in the moment of the breakout these lows and the raising of the grabber. This is the second way. As you can see, these two setups are not mutually exclusive, so you could use them both. For instance, you could try to deal here. If market starts dropping, you could add more right there. So it's also possible. And or vice versa, if market somehow still will break this confidence, it means that's, well, nothing to do with this. You could wait for maybe some reversal and erasing grabber later, moving down using the stop order. So that's the only two ways that I see currently how bears actually could deal with the current situation. For the bulls, situation a bit easier. But in general, guys, this grabber, as you understand, is relatively dangerous thing. It's just because it suggests moving above the stop, back to the 2000 area, and returning back to resistance and reaching of the XOP. So this is really big potential here with it. So that's our view on the gold market. And shortly speaking, for the bulls, it's clear you could use grabber. For the bears, you could try to take position either in the confidence or together or separately with the stop sell order around 1940. And final option for the bears is do nothing, see what will happen with this grabber, how situation will be resolved, and make the decision later when the situation with it will be clear. That's all.